Right, we seem to have most people with us. So welcome, good evening. My name is Tim Metcalf from IFC Advisory, Tern's Financial PR and Investor Relations Advisor. With me this evening, I've got Sisto, Tern's CEO, Annie and Ritchie, Tern's Chairman. What we're going to do is slightly different format to previous occasions. We're just going to run through a question and answer session. I'd like to thank everybody who submitted their questions and opinions. Really appreciated. All of those have been passed on to the board. But what we've done is try to distill those into a number of subject areas and a number of questions that hopefully cover all of the areas that people have been asking questions on. However, even though we've got a lot of questions in advance, we do welcome further questions. So if you do have anything during the session, please don't hesitate to use the Q&A button, and I'll do my best to have a look at that and add those into to the questions that are being asked. So without further ado, we'll get things underway. And as I say, we're just going to go straight into the questions. So the first area that we've had a number of questions on, particularly after the announcement earlier today, has been funding and the company's funding going forward. So the first one is, can you give some more colour on the funding facility announcement announced earlier today? And does this cover the likely needs for funding this year, obviously with any exit proceeds or disposals or value realizations, or however various people have described them, are taken into account?
Let me take that one, Tim. We're pleased to announce the facility today because it is on the path to our goal of self-financing. This is a 3-year facility with a cap of £3 million as part of the facility that enables us to have the capital required to stand our corner in negotiations that are continuously ongoing in the background within the portfolio companies. One of the key features here of this proposal was that we were able to leverage the assets created from the realization from Wild, which is now an investment on our balance sheet, and use it and our belief in its future strength, as well as the facilitators' belief in its future strength as the backdrop or the backbone for this facility. So it fits within the format of Wild providing us with a resource off our balance sheet to help us achieve self-financing. One of the other key features in this facility is warrant coverage, where there's a warrant coverage of 50% of the drawdown that was determined through the VWAP calculation to be done at 6.8p, of which that 6.8p is at a small premium to our net asset value per share. So not only do we have this facility to help us fund and be aggressive in our negotiations with other parties interested in our portfolio that we've developed, but this warrant facility will, if exercised, generate £375,000 worth of additional cash to the company. Small in the grand scheme of things, but still, I think, a recognition of the value of our assets and the facilitators' belief in the future value of the things that we're doing at Tern. So I think hopefully that gives you some color and some idea behind the facility and why we have it in place now to help us achieve and continue to achieve success within the portfolio.
Thanks, Al. An obvious question that a number of people have been asking me today, does that therefore mean that you won't be looking to raise equity, at least until the share price is considerably higher than it is today?
Our goal, as I said earlier, is to try to achieve self-financing here. I mean, it would be silly for me to say we won't raise money, but because we don't know what the future holds. But I think as we're pushing our companies to all achieve break even now that the parameters have changed, we believe this facility will provide us with the necessary capital to stand our corner, and I think that is of critical importance to our shareholders.
Okay. A question that was asked by a number of people ahead of today's announcement was that if you were to raise equity in the future, would you go to existing shareholders first, i.e. through an open offer, rights issue, or other structure that's cost effective?
I think, again, to make a definitive statement on an approach to any sort of a fundraise would be out of bounds, because the market conditions at the time would dictate the route that we would take. But we have tried and continue to do what we can to have our shareholders participate in any offering that we put out there, and we will continue to keep that top of mind in anything that we do. But again, coming back to where we have created a facility using the wild shares, which I also believe is good for the wild shareholders, because we're now tying up, from an escrow point of view, a large block of shares that won't be traded. So I think the value that's been created in wild is being preserved, as well as the future value of wild is being can be leveraged by us to help fund things in the future. So again, we have a commitment that we attempt to commit to keep, and that is in having our shareholders participate. And they're based on today's market conditions, I don't see any reason why we wouldn't do that. But again, we would have to determine at the time when the necessity arises to do the best thing for the shareholders, which may include or may not include participation.
Okay, thank you. We've had a number of questions on the board and central costs and structures and things. One for you, Ian. Does the chairman think the board is of an appropriate size given the limited number of portfolio companies and that no new ones are being added at the present time?
Well, yes, we have essentially 4 executive directors, and all of them are very much engaged with the current portfolio. So Bruce is looking after fundamental and device authority. Matthew is actually seconded at the moment to Connectico, and they pay for his time. And Al is very much involved with Talking Medicines and also Device Authority. So they're all pretty well occupied. We are a public company. Sarah is our finance director, which is also the company secretary. And there is quite a substantial bit of work involved in being a public company. And we just can't, we can't ignore that. We can't shirk it. We have to do that. So I think the executive directors are all really required. And I am the non-exec chairman, but I have a non-exec fellow director in Alan. Alan has got huge experience. Well, he's a chartered accountant, a former partner in a major accountancy company. He chairs the audit committee and the remuneration committee, and that's essentially the skill set that he brings, and also his contacts in the city. I'm based in Scotland, so I'm really more involved with the governance aspect, and then Alan is more involved with the city connections and the audit and remuneration. So I think the board is a decent size. I wouldn't want to cut the non-execs down, and it's difficult to see how we would actually cut the executive directors down for the moment. One of the questions is, given the limited number of portfolio companies and no new ones being added, but we are always looking at new companies. And I would anticipate that we will be looking at fresh investments when the time arises, when we have some exits or when we have resources.
Well, thank you, Ian. One thing that I see that other shareholders don't see is the amount of time and effort that goes into negotiating the contracts that stand behind any of the investments in the portfolio companies, the negotiations with other co-investors, and all the documentation that goes behind that. I don't know if you want to make a comment on, what you see in those very, very lengthy agreements and time-consuming agreements.
Well, our modus operandi has changed a little bit recently because when we started, we were basically the major investor, or the sole investor in many cases, in our portfolio companies. That has now changed. We now have co-investors in all of our companies. And that does mean that we can't just push our weight around. We have to accommodate the plans and expectations of our fellow investors. That can be difficult. That can lead to challenging differences of opinion and so forth. We've always got to sort of reach agreement on what we do. But one important thing about all this is that our fellow investors, we have to have confidence that we can stand our ground in an investment round. So if there's an investment round and it turns out to be obvious that we can't deliver our stake, our share, we can be diluted quite heavily. So we have to be able to stand with our fellow our co-investors in all our and we have to have confidence that we can do that.
Let me add to that, in that what Ian said is spot on, but also what is spot on is our first investment has created now companies where we're now an investor alongside other investors, but the other investors that we're alongside with, have funds that have 300, 500, in the case of QT, 13 billion in assets, and for us as the small investor, it takes a considerable amount of gymnastics in the negotiations to hold our ground and stand in a position where you, our shareholders, are protected from many of the unbelievable terms and conditions that get placed into these agreements that cause future problems for us to participate in, which I won't go into the details, but there are spanner after spanner that get tossed into these things that have not only impact in this round of funding, but have substantial problems for us in the future rounds of funding when those occur. So what we have been able to successfully do is attract new investors that have big funds who can fund the growth phase of our businesses, and also maintain a position where we haven't lost substantially in the negotiations. So we want to thank you for that, giving us that capability, and we hope we can do that in the future. And again, this loan facility sends a message to our co-investors that we're fully prepared to stand and sit at the table and wrestle as hard as we can for you, our shareholders.
Yeah, thanks, Hal. We've already had a couple of questions come in, so thank you very much for that, and keep them coming. One asks, which I'll answer, why aren't other directors here today? Probably my fault. We just thought it was more efficient to have Al and Ian answering the questions as chairman and CEO rather than have the whole board present. The next one that's come through is one for you, Ian. Just asked about remuneration. This has been asked before. Do you think it's appropriate?
Well, we are in a competitive situation for talent, obviously, and we do look at salary surveys and remuneration reports for AIM-listed companies and investment companies. We are absolutely at the low end. We are, very much at the low end of our executives in terms of remuneration. And the remuneration committee, which is Alan and myself, independently, we believe that these are the sort of levels we have to pay to keep the skill set that we have. It should be pointed out, though, that there's a performance element in our remuneration package. And so this year, when things have been a bit more disappointing, the remuneration is almost 20% lower than last year. So in times when things are going well, performance-related aspects of the package can go up, and when times are tight, they don't. And so there's been no performance-related aspect in the current remuneration. So I think we have to be competitive. We have to pay our staff, our employees, the kind of remuneration that is required. But as I say, we're really at the low end of our comparative companies.
Thank you, Ian. We've obviously got the AGM coming up. Couple of directors up for re-election and other normal resolutions being put to the meeting. One for you. The questioner asked bluntly, why should Mr. Sisto be re-elected as CEO?
Is that for me or for Al?
I think it's for you, Ian, actually.
Okay, no, that's fine. That's
Al can give his election speech if he wishes.
Yeah. No, that's perfectly okay. I mean, quite honestly, if Al wasn't able to run this company, then I wouldn't be interested in continuing either. He is the heart and soul of the company. He brings the Silicon Valley aspect to the business. He brings huge experience of international technology business, as does Bruce, for that matter. So we have, a real depth of experience in this, in the type of situation that we're facing. Most of in fact, all of our companies are UK based, but with the exception of Connecticut, they're actually aiming to grow their business mostly in the States. And the connections in the States that Al brings is absolutely vital to building that type of business opportunity. So as far as I'm concerned, Al and Bruce are both absolutely vital to the future of this company, as is Sarah, but certainly Al, very much so.
Thank you. Al, I don't know if it's appropriate for you to say anything more than that, but we may leave it there with Ian's comments.
I'll leave it with Ian.
Thank you. Keeping on these sort of matters, questions asked, why have there been no director share purchases recently, particularly given the softness in the share price?
Yeah, I mean, to be honest, this is a situation that frustrates me enormously. I was trying to buy shares in the company for months and months and months last year, and eventually the closed. We're often in closed periods. We have deals underway or whatever, and we just can't. We're not allowed to. So as soon as I was able to, I did buy shares. Al also bought shares in the last year. So we have been buying shares in recent times, but as a public company, we just can't, do it willy-nilly. We're very much restricted by when we can do that.
Yeah, I personally know that because I come under the same restrictions as the board, and I would like to be buying shares. The final one on the sort of the central aspects. Central costs. Anything you can talk about further cuts to that? Are there any sort of other areas that you're looking to focus on to make sure that the cost base is appropriate for a name quoted company of this size? And doing
I'll take that one. I think we are every month looking at our costs and trying to find ways to save money anywhere we can. One of the things that we're also dealing with right now is the inflationary aspects of services and service providers. What we were paying in 2019, 2020 in legal costs, accounting and services, and advisory services for valuations, et cetera, to provide substance to what we do, have dramatically increased. In cost, maybe 1.5 to 2 times the rate of inflation. If you look at our cost basis today versus 2019, 2018, 2020, and adjust for inflation, I would argue that our cost base has actually come down with regard to what we're doing. And as I said earlier, we're always having to deal with unsolicited proposals coming into the companies from sources of capital that would like to take our percentage from where it is to something much less. And that requires us to have the best available support, particularly on the legal side, to give us the ammunition to fight with, to hold our ground. So we're really looking at the impact of inflation, the impact of the costs for services in general that have gone up, and in fact, just rental increases is one of the things we're really focused on now, is trying to figure out how to find a new place to go to save money, because we're unhappy with what we're paying for rent. So we're looking at very atomic levels of our cost structure and trying to stay flat, or if possible go down, given the cost of capital right now changing dramatically in the last 15 months.
Thanks, Al. As you've been speaking, we've had a few follow-ups to some previous points that have been made. One questioner asks, how do PIs know when the close period is? Simple answer is you don't, and you can't. Under MAR, there is a month-long formal close period ahead of the expected release date of results. But other times that the company may be, and directors may consider themselves in a close period, to say that they are is actually inside information in itself. So I'm afraid that's something that can never be commented on, whether the company is in a closed period or not in a closed period, as I say, outside of those results dates, if the results date has been announced. Yeah. So hopefully there's some understanding in that one. On another point, the questioner makes a comment here. The discussions we've had about skill sets and the board makes no reference to actually the investee management's CEOs and other management's skill sets. And could you comment on how they're leveraged to enhance the overall value of the Tern portfolio?
Absolutely. I would say our cadre of CEOs and the SLT teams at our companies are comprised of founders and people who were the initial visionaries of the business, and other folks that we and some of the new investors have been able to recruit into the business. They are based on salary plus performance bonuses on achieving results, and as well as stock options that are quite handsome stock options that are given to the senior teams that get rewarded at the time of a realization where there's a change of control or a liquidity event. So their incentives are very much in line with our shareholders' incentives to achieve growth, profitability, and a realization in not necessarily that order, but in the combination of all those factors. And I would also point out that the large part of the group makes a lot more money than we do in these positions, because in order to recruit high quality people, it's a very competitive marketplace. So the comp structures that we have in place within these businesses is market, and it's not just Tern, but it's Tern and the other investors that compose the remuneration committees of these businesses in such a way that we have applied best practices as well as benchmarks to provide compensation that we believe is fair and creates the behaviors that we're looking for as the investor group to incentivize these individuals to achieve a realization of substantial benefit to the company. Okay. That company being Tern.
Which I think neatly leads us on to talking about the portfolio companies. Question here: can you comment on how each of the portfolio companies is currently doing? Just briefly. I know that could be a session in itself on each one.
I will be brief, but try to be somewhat precise given the rules of what we can say. Yeah. But as we indicated in the results for 2022, the world's changed with regard to cost of capital, and as a consequence, the metrics for businesses have changed dramatically. As we reported in the annual report, all of our businesses, our businesses are growing in terms of recurring revenue, the key metrics that establish valuations. And I think that's proven to be a benefit given the valuation decrease in the metrics that calculate valuation, so that we have been able to not take some of the 60%, 70% kind of downgrades within the portfolios. That said, from a business point of view, we also said we're driving every one of these to profitability, because that's the metric for the of creating realizable value at a multiple over the revenue. So every one of our companies is on a path to do that at various different stages, but the goal is to get there as quickly as possible. We're quite pleased with the performance that's going on with fundamental surgery. They have won a number of awards in the medical marketplace, and have now recently introduced their SDK, which now creates a greater development resource to develop more IP for their business model that we think will help accelerate revenue and growth. They have one of the largest, if not the largest, life sciences investor in EQT in the business, and most recently Apple, with its new headset, I think has really stimulated the idea of using AR and virtual reality to use in the education world along the path that Fundamental's taking. Wild is no longer technically a portfolio company, but it's an investment that we hold as a consequence of the realization on NASDAQ North. They're performing really well. Their order book, as Alistair has pointed out, is at record levels and should provide a substantial acceleration to break even as they begin delivering the land stations, the terminals that provide the connection to the satellite network that is also increasing. And I think testimony to their performance is they just exercised their TO3 warrants at a 97.1 conversion. So I think in the Swedish marketplace on NASDAQ North, it's a stock that's well thought of, and the warrants were a clear indication of people wanting to get more of the shares to move forward. Kinetico, Matthew's in there, really helping the business achieve, seeing great progress as a consequence of the new introduction of Impact as one of the new capabilities of their baseline feature product, Asset Minder. It really is focused on the energy side of things, and energy is one of the biggest problems in running factories and facilities that require constant utilization of resources like energy in ways that cost savings are critical, and I think the company is really positioned well in that area. And Device Authority is continuing to make progress and has really, I think, achieved success within the government area in the U.S. right now through the relationship they have with Virginia to attack the SBOM, or the Secure Bill of Materials for Software initiative that the government has set out through one of Biden's executive orders, and that is starting to gain momentum and traction across the U.S. and outside of the U.S. As tensions and particularly tensions in the cybersecurity world, are increasing. That they are positioned to see there. And then lastly, Talking Medicines, I think is really positioned well right now in that they were way ahead of the curve in using artificial intelligence, and in fact, they were early on users of ChatGPT to do curation of large language models, which is part of the technology behind the whole AI environment, and have success now in New York in the pharma marketing area with people utilizing the Talking Medicine's AI capabilities to create better insights into customer as well as healthcare providers or doctors' utilizations, beliefs, and understanding of what people are using these medicines for. And I think we're going to see some really important releases of information from Talking Medicines on the ethical use of this product, as well as the success over the rest of the year of people adopting their approach to artificial intelligence, which really takes into account precise data models that create value rather than create concerns or ethical issues. So I think we have a group of companies right now that are really positioned well in the markets that they serve.
Well,
I
thanks.
hope that helped.
No, thank you for that. Obviously, they're all making good progress. Can you talk about the future roadmap for them, i.e., what will determine when you look to realize value?
The idea of realizing value hit a speed bump in the second half of 2022 when companies were achieving results, liquidity event results predicated on 20 to 25 times multiples on the metrics that were being used. Those multiples have come down to 3.5 to 5.5 times, depending upon the nature of the business. We, as we said before, continue to constantly look at opportunities to create a realization within any one of our portfolio companies, but we want to do so in such a way that creates a reasonable return for our investors. I mean, if we look at Wild as an example, the realization there was about a 5 times multiple of capital invested, which was a pretty good result on the IPO. We're looking to achieve things like that or more within the framework of the companies that we are invested in today. The market is substantially different. There's very little activity. When I say very little activity, the activity level of investments is down about 30% in the UK alone, and about 30% or more worldwide from venture capital being put to work inside companies today. So we have great our companies have very great customers, and you've seen some of the logos that have been put up on Capital Markets Day. So I think we're fortunate that our companies are doing businesses with companies that are billion-dollar businesses and industry leaders. And those industry leaders, hopefully, at some point, will want to have a competitive advantage, and a competitive advantage that's delivered by our companies, and we can leverage that success. But the table today is a bit in disarray. We are not hesitating to have discussions with regard to a realization or some strategic event, but we're also not going to give away the hard work that we've achieved with your assistance for less than what we believe to be a fair price. So we're not saying no immediately to anything. We're investigating everything to the fullest, which again takes time and energy and money to do. But nonetheless, I think it's an important work that we do for you to achieve a result. I think
by that it's you, the shareholders, not me. Although
yeah,
I'm a shareholder. Yeah, Al, I think what I'm hearing there is this is something that's constantly looked at. It's soon as appropriate, but it's also about getting the appropriate timing and
yes,
that value timing. I've had a question come through. If you don't mind, I'll answer. They've said noting financial data is confidential on the portfolio companies. How does any bona fide bidder investor actually evaluate them? Well, it's pretty simple actually. if they are bona fide, NDAs, they can do it. You know, I used to be an M&A banker running these sort of processes. They are very formal. And if you were anybody on this call a bona fide bidder for any of these businesses, I'm sure you could have plenty of information, but you would have to pass quite a high hurdle before that information was given to you. You would be under substantial restrictions, and it would only be given to people that aren't going to damage the commercial position of those businesses. So, you know, I know a frustration for probably everybody on this call, the amount of information they get on the portfolio companies, but it is important to protect their commercial positions, and it's no different, frankly, to any other private equity or venture fund that you might like to invest in.
And there's one other feature that's included in that, Tim, is that with every one of these discussions, when they end, there's a tail on the NDA. And the tail on the NDA says you, the investor, can't trade in this business for 6 months to a year, or say anything about the information you gathered. So there's the front end hurdles, but there's also the tail, so that we're protected and you, our shareholders, are protected from the information gained.
I promised to a lot of people that I will ask the majority, not all, the majority, and there are one or two questions that I don't understand, I'm afraid, but I will try and answer as many as I can. This one says, have you turned down a historic exit opportunity which you feel in hindsight should have been taken? Were you too greedy?
Not that I know of. Well,
No, not in the least.
Okay. All right, well, I've asked that one. Moving on, talking about the portfolio, had a number of questions about NAV valuations, and obviously those go out formally twice a year with the full year and interim results. I have had a questioner saying, you know, have they changed since the last set of results came out, which I think shows not quite a full understanding of how they're actually how they're calculated and how they're looked at. Al, Ian, something to give a comment on?
The NAV calculations are done twice a year, and they're done basically at a point in time, and that's the 31st of December and the 30th of June. And as a consequence of that, there are many variables that are applied to the valuation. For example, the strength of the pound against the the kroner in Sweden. So we had a big shift in value at the end of the year, December 31, with Wild's valuation that we carry, because the kroner and the pound moved significantly. The other part of it is third-party validation, of which we do during a period, and that third-party validation applies what a third party like EQT has offered to pay and for new shares in our businesses, and those get calculated into the net asset value calculation for the portfolio itself. And lastly, if there hasn't been a third-party validation, we're required to get a third-party valuation organization to work with the accounting firm to agree on the valuation that we're proposing get carried forward. And it's not something we set, but it's set between the accounting people and a third-party valuation organization that costs money to utilize, but provide you with a fair value assessment at those two periods in time. If Wild shares, for example, go up 20% on the 1st of January, we're not going to benefit from that because it's that one point in time, December 31st. And quite frankly, if you look at our portfolio, you could argue in every month of the year a goodness factor that could take the value up, or something that happened that might take the value down. So the industry and the accounting rules dictate how this is done. We live within the framework of how it's calculated.
Sorry.
No, it's important to recognize the fact that net asset value is an art, not a science. It really is, and also that I think without exception, we would not sell any of the businesses at the current NAV. We're looking for a substantial exit, substantial realization from all of them. And but we have to be prudent, and we have to value a very prudent valuation. So that, to some extent, that's part of the fact that we're a public company and that we're an investment company. So we have to err on the low side all the time. But when we actually come to realize these businesses, we'll be looking for a much higher valuation than the ones that are on the books. And of course, Wild isn't an art, that's a science, because it's a public company. So that valuation is fixed. And
it's fixed every day.
Exactly, yes. However, Wild has now done their warrants, so they no longer have warrants hanging over them. And they've got really substantial business opportunities coming forward. So, we do worry about selling Wild too soon.
Okay, thank you. Another couple of questions on SVV, Shore Valley Ventures. Just a question to say, haven't heard much about it recently. Are they still active? Is Tern still an active participant?
Well, Tern is a very active participant. I'm actually on the investment committee. So we're having an investment committee meeting in not too distant future here. They, like every other venture capital firm, are looking at their dry powder and looking at investments and trying to adjust what was some of the early thinking last year, end of last year to now, in terms of making investments. It takes anywhere from 4 to 5 to 6 months minimally to decide whether you're going to invest in a business or not. And a lot of things that are on the screen to look at from an investment point of view were at values based on last year's thinking. And there's a lot of work going into changing expectations within those companies to now get an investment at some number less than what they thought they would get in terms of value. So someone who was thinking about being valued at 10 million pounds pre-money for an investment is probably looking at somewhere in the neighborhood of 5 to 7 million pounds, a 30% decrease from where we were last year. So there's that as one of the reasons for the slowdown investments, but also the quiet nature of SVV. They have quite an incredible amount of deal flow. So I think we'll see some substantial activity in the second half of the year as the valuation reset sort of takes hold within the startup community.
Yeah. Okay, thank you. We're having a few sort of clarification questions coming through. One or two, I'm afraid we can't answer on implied exit multiples and what you'd like to achieve as a return on invested capital. I'm afraid as a public company, no public company could answer that one. But one question that just asks, in the portfolio sort of update briefly that you gave, Al, you seem to skip DA. I don't think that was the case, but it certainly wasn't deliberate.
No, I talked about DA and the government and they're winning awards and becoming a critical part of the future thinking. Now that the attacks on IoT devices are happening strategically from bad acting governments, there is a real necessity to change the way security is done. And I think Keyscaler is top of mind in the industry as one of the few capabilities that have the wherewithal to deal with hundreds of thousands of devices simultaneously. And so I think the company is in a new area. From a security point of view, it's a very conservative kind of world. So if you think how long it took 12 years for ATMs to become popular, and it was predominantly around security issues. They're in an area right now where I think the nature of the attacks and the problems being created, particularly by bad acting governments, are now causing governments to want things to happen. Going back to my days at RSA, we used to use an example, and I think this is really relative to now as well, is that you had seatbelts in your cars for years before you started to use them, and you started to use them not because you wanted to be safe, but because the policeman was going to give you a ticket. You know, you were going to get a citation. So seatbelt utilization went up dramatically, and because it went up dramatically, companies like Honda and Volvo positioned their vehicles as safety cars. You know, they changed positioning of their business, and that changed that industry. And not only did seatbelts continue to improve, but now you have airbags, and you have all sorts of other things that were spun from that change in belief systems. I think now, with governments really taking an active interest in protecting their critical infrastructure, they will be passing laws requiring things to be, as we said earlier, SBOM, the SBOM being a real critical factor in proving to the government that you're a secure vendor to do business with the government. And I think that will accelerate dramatically the adoption of products like Keyscaler in the marketplace. So I hope that clarifies a little bit of my SBOM discussion.
I had another questioner ask, are co-investors in portfolio companies ascribing exactly the same value to them that Tern does in its accounts? My understanding is probably yes.
Yes.
Some instances we don't know because they're not public and don't have to disclose it, and don't even disclose it to their underlying investors. But I think the answer to that is broadly yes. Is that correct?
Yeah, I think so. Yes. Yeah.
They would. They, as we put money in, add a value. Now, whether they carry that value inside their firm is up to them. But in terms of writing a check, their check and our check are based on the same science in terms of the numbers of shares and the price per share that we agreed to. So there's no doubt about that being absolutely positively the same.
Could I just make a comment about that? Because our co-investors, because we're a public company and our shareholders comment in public, our co-investors in many of these situations are reading these comments. If there's negative comments about unjustified negative comments, then it does do us damage. It really does, and it's very. I think it's important for our shareholders to support the company. And not to trash it. There's no point in doing that, and actually it could cause quite serious problems when we come to doing. I mean, if our co-investors don't think we can stand, an investment, then if they don't have any confidence in us doing that, then it's very negative, and so it's really quite important, I think, that we take that quite seriously.
No, I think that's noted, and certainly something that I see on a regular basis. I think we're getting towards the end of the session, but I just want to cover one or two sort of final questions that are coming through, some revisiting old ground. Questioner asked, any active future plans for an OTC listing or other listing in the US? I think our announcement clarified why we couldn't do it. Al, I don't know if you want to comment on that.
Just the way the law is written in the US and the way we have to describe ourselves on AIM are in total conflict. So getting listed on anything in the US would require us to change our listing in the UK, and we would prefer currently the liquidity and the capability that AIM and the LSE provides, bar none, to move forward. So I mean, again, very frustrating for us because again, things were grandfathered in, and my biggest complaint when we were doing this was, how come Berkshire Hathaway, which is an investment company, can do this? Well, they're grandfathered in with a clause that, you know, allowed them to do this through one of their insurance companies, which is, you know, crazy. So I think from a simplicity point of view and from a success point of view, we're looking to aim an LLC to be our source of capital and now and for the foreseeable future.
And I think it's important to note that we were actually breaking new ground here. AIM investing companies, which is the technical description, hadn't tried to go through this process with the SEC and you know, list in the US.
Yeah.
So you know they had to work out how their rules fitted in with the AIM rules, and it did take quite some time, and ultimately wasn't the result we wanted, but it was what it was.
Yeah, it was a very crazy search to find experts to actually advise FINRA and advise the SEC and then advise us as to how we are structured versus the rules as they're interpreted. So very disappointing, but glad that here we are and we're moving forward, and AIM and LLC is the way to go.
Absolutely. Okay, well, we've gone beyond the 3/4 of an hour that I said to a couple of people who phoned me earlier it would last, but hopefully we have answered the majority, if not all, of the questions that we can. There were one or two on there that I know we haven't answered, but the answer to them in many instances is yes, it already happens. But if you feel that there is something that hasn't been answered, please do get in touch. Tern at investor-focus.co.uk, and myself and the team will always try and answer your questions, as will Al, Ian, and the rest of the Tern team. But I'd like to thank everybody for joining us. I think it's quite remarkable that I've seen the participant list only go down by 2. And it's not because we've only got 2 on here. There's well over 100 people on today. So thank you very much for everybody for listening, sticking with us, and look forward to your company in the future. Thank you.
Thank you. And again, we really appreciate your support.